What I'm about to share with you likely will not shock you. However, it is an unfortunate reality that we are facing here in the United States with regards to gold. But there is something that can be done that will change everything with regards to gold in general, not just price. But let's talk about it as we explore. Gold. It is recognized the world round for what it has been for thousands of years. In fact, I would even make the argument that here in the United States that most people understand that gold is valuable. I know that sounds like such an elementary concept for most of us, especially if you're watching this video. More than likely, you already know what gold is. You already know its value, and you probably even understand its value beyond the price, because there's a difference between price and value. But nonetheless, there was a study done by Goldman Sachs about ownership of gold in the United States, and Americans barely own any gold. That's really not much surprise to us, but honestly, when I saw these statistics, I was a little bit surprised as to how little they own. And it is very expensive. In fact, as I record this video, it's at or near all-time highs. And that is something that likely will probably continue to be the case. We're going to see probably gold price stay around where it is. If there's a pullback, likely it's not going to be by a whole lot. There's more and more people that are saying that we're not going to see anything below $4,000 gold anytime soon. And so that means that we have to ask ourselves a question. Well, what do we do about it? Can you get into gold, especially given how expensive it is, measured in dollars that are deflating every single day in terms of its value proposition? Well, yes, you can. There's ways to get in with smaller types of coins like what you see here, or the gram bars are becoming more and more popular these days. My friends at Summit Metals have these cool wallets that you can buy, that you can fill up with these gram bars from Scottsdale Mint. A great way to be able to have gold in a small weight size, and for not a whole lot of money compared to what you would pay, for larger coins and bars out there. It's a way to get into pure gold and have a cool way to display it. Summit Metals, experience their great customer service for yourself by clicking on the link in the description below. So this idea that Americans barely own any gold, let's first talk about where they can get into gold very, very quickly, and that is in exchange-traded funds. Gold's record rally this year has grabbed the headlines, according to Business Insider, but American investors barely own any of it, which means that gold's price could have even more room to run, according to Goldman Sachs. Even with gold hitting repeated highs, U.S. ownership hasn't budged much. Gold ETF exposure is still 6 basis points or 0.06 percentage points below its 2012 peak. And of course, that is when gold was coming off of its record high at that time, which I think was $1,923 an ounce. Looking back, that would be a bargain in today's money. That's for sure. I mean, we long for those days again. Crazy. And that's since the launch of gold ETFs in the mid-2000s, according to Goldman Sachs, with a report analysis that they had done, which was published last week. And so that is below that peak period of the exposure to gold ETFs. The low gold allocation is simply because portfolio growth has outpaced gains in gold prices and volumes over the past decades, according to Goldman analysts. Now, why am I talking about ETFs? Well, because that's probably the easiest way to gain exposure to the gold market, and that's really all it is. It's not actually owning gold itself. It is exposure to the price of gold, and that's it. With very, very little trade or premiums tied to the trades, you pay a pittance compared to what you would pay above an ounce of gold to get a variety of the metal, such as the examples that you see before you on your screen. So that is the difference, and it would be an easy thing to do, especially considering where all the other money is going in the stock market. I'll give you more on that here in a moment. We have seen gold surge to new all-time highs, even when adjusted for inflation this year in 2025. But the analysis has shown that the rally hasn't translated into meaningful increase increases in actual U.S. ownership. In other words, people really are not paying attention to the gold market yet. It seems like that's the case. Gold ETFs make up just 0.17% of private U.S. financial portfolios as of the second quarter. That's a microscopic slice of the roughly $112 trillion that Americans hold in stocks and bonds, according to the analysis of Goldman Sachs. Think about that, 0.17%. Now, most conservative analysts say that, hey, if you want to diversify, put in 5 to 10, maybe up to 20%. This is 0.17%, not even a percent. That tells you that Americans are not paying attention. And of course, a lot of that other speculative money is going into cryptocurrencies, which are now not showing as much favor these days, precisely because of other assets and other things going on. But and I think we are starting to see a shift into gold to some extent, and maybe even silver. Silver kind of really is more the speculative play at this point in time. Many think that silver's got more potential to move up than gold at this point. Gold's been kind of sitting at this number for long enough that, it's almost like becoming normal. But nonetheless, this is pretty interesting analysis that we're seeing here. Goldman's data also shows that fewer than half of large U.S. institutions managing over $100 million hold any gold ETF positions at all. Among those that do, allocations typically sit between 0.1 and 0.5%. For major long-term investors, only about 0.2% of their portfolios are in gold. That's crazy to think about. I would have thought for sure there would be more than that in the allocations that we see in the gold market, measured by the paper trades. Crazy. So despite the social media buzz around the Costco gold bars, and I participated in that. I talked about that a lot back there in the day when you could get those bars, and when you had your credit card points plus your membership rewards, you could get gold for under spot as the price was rising above, $2,500 an ounce, and then up to $3,000 an ounce. So the Costco gold bars and U.S. Mint coin sales, the report notes that physical gold demand in the United States is tiny compared with the ETF flows, which again, I remind you, are at 0.17% of private U.S. in financial portfolios. So it's a fraction of that. Crazy. Wow. So how does that translate to the weight? Well, it's only between 11 to 15 metric tons year to date versus roughly 400 tons of net ETF buying. Think about that for a moment. That is crazy. Now, how do we translate that into ounces? Well, if you look at Gold Eagle sales reports, the bullion sales reports that we've had just with Gold Eagles for 2025 so far, that number is 360,000 ounces. 360,000 ounces. That's year-to-date sales of Gold American Eagles. Now let's take a look at the American Buffalo Eagles. If we look at that for this year, sales to date, we can see that those amount of ounces that have sold to date are just 118,500 ounces. So that's a pretty, that's not very much, but that is a pretty good chunk out of the total number of ounces sold so far this year, according to their numbers. So 15 tons estimates about 482,250 ounces. That's it. Crazy to think about. So that's it. So a lot of it's foreign gold bars and the like, and that's all that has been sold this year. So that's pretty amazing to think about that that's it that has been sold in the market this year. And imagine if people that were bought into Bitcoin sold their Bitcoin, especially if they sold at a higher price and got into gold, how much of an impact that would have on the price. Likely it would go up fairly dramatically, especially if you moved even a quarter of the amount of money spent into Bitcoin into gold would have an impact on the price. And of course, if people increase their portfolios from other positions, especially with interest rates going down and other areas of economic concern, which we are in a period now, I would think that more would get into gold, or at least see the potential there with gold. And so that could be a game changer if we saw the crypto sphere make a move, or at least a portion of their portfolio, out into gold and other stocks, bonds, and that type of thing, and they increase their position into gold, it would be a game changer. And by the way, we are an anomaly, I think. Maybe some other Western nations are too, but I think in a sense we're uniquely in a position that is unique in such a way that we don't seem to really care a whole lot about gold in the United States of America. It's crazy. So this low ownership stands in sharp contrast to recommendations coming from major market voices, including some of the big banks out there, Citi, UBS, Morgan Stanley, BlackRock, and Bridgewater founder Ray Dalio advising investors to add gold to their portfolios. Of course, it's no surprise about Ray Dalio, but I think people see some sort of pessimism when you're hearing it from Citi, UBS, Morgan Stanley, and especially BlackRock. The gap between those recommendations and reality is exactly what Goldman says could push gold's next leg higher. And I do think that is possible. It just depends on how much of this is going to occur. Now, I have been buying more fractional gold as of late. I've been buying some of the half and quarter ounces, tenth ounce pieces here, even some of the even smaller pieces here, like this little. I think this is a quarter sovereign here from 2022. Little tiny pieces like this are becoming a bigger portion of my portfolio. These little $5 gold pieces are really nice. Nice to be able to add those as well to the stack. In fact, my most recent one that I got, just showed you in a video the other day, is this, again, another 1900, the second 1900 that I got this year. Two of them, same year. But nonetheless, that's the kind of gold I'm talking about. It's you can own even just a little bit of gold is going to be better than no gold. And if you're an ardent silver stacker, I think it's probably even more advisable to get into at least some gold, because gold has proven itself to be a little bit more, much more of a stable store of value and wealth over the long course of time than even silver. And I believe in silver too as a preserver of wealth, but gold, I think even more is the case. So I think this is fascinating. Now, the bank estimates that for every 1 basis point or 0.01 percentage point increase in gold share of U.S. financial portfolios, that would push prices up by around 1.4%. Now, I don't know that I necessarily agree with that analysis that just a 0.01 percentage point increase is going to push the prices up by that much. I guess it's possible, but Goldman argues that if households or institutions meaningfully boosted their gold exposure as a diversifier, especially amid global macro uncertainty, including concerns about the fiscal outlook, such inflows could substantially raise prices in the small gold market. So that is what they're seeing there. And I think to some extent that could be true, but I think it would require probably bigger hands in the gold market that could have an impact. Of course, if you and I buy a gram, or if others get in there and increase their portfolio holdings or start new with a gram at a time, how many of those would we need to be able to have an effect on the market? I don't know. How many grams would we need? How many ounces would we need? It's all dependent on the amount of available, the amount that is sold so far, and the like. But I'm surprised when you're looking at the numbers just how little the United States owners are invested in the gold so far this year. And so let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.